Welcome to the Roy Morgan Weekly Update. The latest Roy Morgan survey on voting intention shows a significant swing to the Labor Party, up 3.5% to 53.5%, and well ahead of the Coalition on 46.5% on a two-party preferred basis. If a federal election were held now, the Albanese government would be re-elected with an increased majority. The swing to the government came on the weekend that the Labor government easily retained the seat of Dunkley, despite a swing of 3.6% to the Liberal Party. The two-party preferred vote in Dunkley currently stands at 52.6% Labor and 47.4% Liberal. The Labor Party primary vote increased by 0.9%, almost 1%. The Liberal primary vote increased 6.8%. to 39.3%. However, this result is still below the 40.4% received by the Liberal Party and the United Australia Party and One Nation at the last election. The seat of Dunkley is really diverse, and swings to the ALP in suburbs like Seaford South and Frankston South were enough to counteract swings to the Liberal candidate, the local mayor Nathan Conroy, in places like Mount Eliza and Langwarrin. To win the seat, the Liberal Party needed to secure swings across all the different areas, and it failed to do so. There was also good news for the Labor government on the inflation front last week, with the ABS reporting lower than expected inflation in January of 3.4%. This all but removes the chance of an interest rate rise in mid-March, and a definite positive for the government. Government confidence was down slightly this week to 81, still well below the neutral level of 100, because only 33.5% of Australians say the country's heading in the right direction, and the majority, 52%, still say the country's heading in the wrong direction. There was also down news with consumer confidence. The ANZ Roy Morgan Consumer Confidence fell 2.2 points to 81 this week, the lowest the index has been so far this year, although it's 1.1 points higher than this time a year ago. Consumer confidence has now spent a record 57 weeks below the level of 85. Although the Reserve Bank have not increased interest rates since November, the momentum in mortgage stress and cost of living pressures continue unabated, keeping a lid on consumer confidence. Inflation expectations were down 0.2% to 4.9%. So Australians now expect annual inflation to be 4.9% over the next 2 years. This is the equal lowest level of inflation expectations for over 2 years, since February 2022. So on 3 occasions previously, inflation expectations have dipped to this number, 4.9%, in September 2023, and then a month ago in early Feb. On each previous occasion, inflation expectations have soon bounced back higher to 5% and even above. Part of the reason inflation expectations seem to keep bouncing back quickly is the continuing high price of petrol. The average retail petrol price increased by 4 cents last week to $1.97 a litre. Average retail petrol prices in Australia have now spent a record 34 weeks, more than 8 months, above $1.80 per litre. And petrol prices did dip early in January, but have now been above $1.90 a litre since late Jan. Now to superannuation. Roy Morgan measures customer satisfaction with the financial performance of their superannuation monthly, and the results show a turnaround in recent months as the ASX 200 has soared to record highs above 7,700. In January, 66.7% of Australians with superannuation said they were satisfied with the financial performance of their super. This is up 1.7% from a recent low in July 2023, just 6 months ago. The result for January is also more than 8% higher than the long-term average of 58.3%. That's taken over the last 17 years that we've been measuring this. In particular, It's satisfaction with self-managed funds and industry funds that are up. Self-managed funds are up 2.4% to 76.8% satisfied, and industry funds are up 1.8% to 68.6%. And they're what's driven the increase in satisfaction. Satisfaction with public sector funds and retail funds are up by less than 1% over the last 6 months. For more details on what's driving the increase in satisfaction with the financial performance of super, visit the Roy Morgan website. And finally this week, to the online retail space. Roy Morgan interviews a representative cross-section of over 65,000 Australians each year to obtain a fully rounded understanding of the lifestyles, attitudes, media consumption habits, and other key factors that drive purchasing decisions. Interviewing tens of thousands of Australians in detail is the only way to truly understand the scope of the new internet-only retail businesses like Shein and Temu. And the results are extraordinary. Shein and Temu have surprised everyone. Few could have predicted that a mass market for ultra-cheap throwaway retail existed in Australia. Certainly cost of living pressures have fueled both Shein and Temu's rise as Australians look to get more for their dollars. But an estimated 1.26 million Australians have shopped at least once a month at Temu and 770,000 at Shein. Many, of course, have shopped multiple times. If these shopping and spending habits are projected to a full year, both Shein and Temu are already on track for over $1 billion in annual retail sales each and are growing quickly. A mix of ultra-cheap prices and convenience has provided to be a winning formula among young parents and larger households, with these cohorts overrepresented among Temu and Shein shoppers. Interestingly, retired Australians who ramped up their app usage over COVID are also overrepresented among Temu shoppers, embracing the platform's ultra-low prices to help their limited dollars stretch further. Looking at gender, women are the early movers in this space. 80% of Shein's shoppers and 70% of Temu's shoppers are women. And that's a wrap. Thanks for your interest this week in Roy Morgan's latest results, and I'll be back next week to bring you the most up-to-date readings on consumer confidence, inflation expectations, voting intention, and unemployment. Thanks for listening.